Quick shout out to today's sponsor, Katana. We'll hear more about Katana's 1 billion cat campaign later today, but for now, let's get into the episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of OX Research. Today, we're joined by a special guest. We've got TN, co-founder of Pendle, alongside some of my friends here at Blockworks, Shonda Devins, Carlos, and Luke from the research team. How you guys all doing today?
We good. Yeah, been feeling pretty hyped about the Boros Launch in the last couple of days, so pretty good.
Definitely. Love to hear that. And I know we had to work through the time zone differences here. It's late for TN. It's early for most of the rest of us here on the Blockworks side. But I guess if you want to just jump into it for us, TN, like maybe give some quick background on yourself and then on Pendle before we kind of dive into, all things Pendle and Boros. That'd be a great starting point. So go for it.
Yeah, thanks for having me. So I'm TN, one of the co-founders and CEO of Pendle. Pendle, we are rates protocol. So at this point in time, we have two products. One's V2. V2 is conventionally known as the product that enables the tokenization and the trading of yield. So it popularized yield trading, points trading, and we work very closely with protocols like Ethereum, Eigenlayer, and the other LRT stablecoin projects. And then more recently, just last week, we also launched Boros, which is also a yield trading protocol, but with margin. So the first use case for Boros is the trading of funding rates, specifically BTC and BTC and ETH markets on Binance. So that's a couple of days old, and I think we'll probably spend more time talking about the product.
Awesome. I guess maybe just kick things off with the recent Boros launch. Like, curious from your POV how that launch has been, just in terms of the initial kind of activity, more or less than you expected. Have you felt that it's a success so far? What's the general feeling there?
So I want to say it went better than we initially thought. So when we started out, again, because this is the first iteration of the product, and it's a 0-to-1 product, meaning that there hasn't been any kind of precedence before the launch. And we've spent some time constructing educational materials, but we were relatively conservative when it comes to estimates. So we started out with $10 million of open interest cap for each of the two markets. So in total, we were expecting, we allocated $20 billion of cap open interest for Boros, expecting that it might take 1 week to fill. But after 1 day, I think we more or less got up to speed, and we had to raise the cap fairly shortly after. So at this point in time, 5 days in, we are we've seen $27 million of open interest. Sometimes it goes higher, sometimes it goes lower because there are trades. In all, trading activity has been fairly healthy as well. Even with just we started with 1.2x leverage, and then I think on Saturday we increased it to 1.4x. Even with that amount of leverage, the trading activity has been fairly healthy. At this point in time, I believe it has already passed $19 million notional volume. So it's gone better than we expected. Having that said, I think there's still a lot more to do, because we have features that we have planned out that we think can improve the UI UX, and those will be rolled out over time.
So TN, I'm curious, what APIs or metrics do you need to see hit in order to inform increases in the OI caps or leverage caps? And ultimately, how high do you think these OI caps can scale to eventually?
So I think over time, in say as we get comfortable with the product, right, there shouldn't be a cap by right. But now we're starting with a cap mainly because we are not too focused on growth. We are making sure that the product is safe and sound first and foremost before we want to scale up. Now, so at this point in time, it's hard to pinpoint exactly a specific amount in KPI terms for us to increase the cap. It's more the case of looking at a couple of things. Firstly, we want to make sure that the liquidity is sufficiently deep, that there's a good amount of like static liquidity, and then when there's very aggressive market movements, there are people or like whether individuals or like institutional traders coming in to make the market efficient again, capitalize on some of these opportunities. So that's one aspect, right? That's from the liquidity perspective. Secondly, it's also from the perspective of risk management. We are dealing with liquidation system for the first time in the history of Pendle because V2 would never have to deal with that. Everything is like a spot trading of yield, but with margin system in place, then risk management becomes a very different kind of consideration. So we need to make sure that our risk system is robust enough to handle very volatile swings. Like for example, if implied rates move from 7% at the moment and then suddenly it jumps 10 times to 70% in a very short span of time, we need to make sure that our risk system can capture that and then deleverage accordingly. Otherwise, we might run into that situation, and that's no good for anybody. So until we feel comfortable with the risk system that we have in place, we will continue to operate with low leverage. And then over time, as we go through more and more of these very volatile swings, we should naturally have more data points. And then once we see that our risk system is sufficiently resilient, then we can increase the leverage. Now, until we come to that, we will just focus on safety, security. And then once we cross that tipping point, I believe we can do things and scale up more aggressively, like increasing the cap until there's no need for a cap. And then the leverage can also be adjusted upward because now we're very modest, 1.4 times, 1.5 soon. But it's like, I would like to see the platform supporting maybe 20x to 50x kind of like leverage for rates trading.
Does this logic also apply to adding like new exchanges, new assets, like new maturities? Or like, are you looking for other metrics in that case?
I think with markets, to some extent, yes. Now, the reason why we start with, just for some context, right? The reason why we start with BTC, USDT, and ETH/USDT is because these two collectively, when with their open interest combined across the exchanges, it's probably closer to the total TVL of DeFi. And we think that just focusing on BTC and ETH markets for a start proves to be a sufficiently big addressable market for us to work with. If we want to add more markets further down, we will. But we need to also make sure that their liquidity, the trading activity on various exchanges like Binance, Bybit, Hyperliquid, it is healthy. Otherwise, there could be manipulation risk. We don't know how reliable the Oracle could be. If especially if the liquidity on a specific venue is very, very thin, then it could subject to some form of manipulation. So yeah, I think for adding markets, adding leverage, like the considerations will alter a little bit, but I think that core principle of focusing on liquidity and then our internal risk management should remain quite consistent across our evaluation of all these different segments.
So it's quite early still, and only 1.4, 1.5x leverage soon. But have you seen any liquidation volume yet on the initial rollout?
Well, at this moment, not yet. I think, with 1.4x, most people are still handling, depositing small amount and then trading quite conservatively. I suspect if we raise it to 2, 3, we should probably start seeing some liquidation.
And you also said you wanted to make sure liquidity is sufficient and deep for traders in order to scale. So I'm curious, like, what that process was like, getting either market makers or traders onboarded to be ready to use Boros day one. And at least checking the numbers this morning, looks like it's doing 20 million in volume a day. So yeah, curious what that process was like with getting people onboarded.
Yeah, it's actually a fairly long process. I would maybe break it down into different types of users and then their respective processes. So here, on the one hand, we wanted to onboard market makers, and then the other group of users would be the sophisticated retail. So they don't belong to any entity, but they have very deep appreciation for derivatives. They know yield trading well. They have views on rates. With respect to the first group, the market makers, these are the likes of, say, Wintermute, GSR. They make markets. They have exposure across many different types of products and instruments in CeFi, DeFi. So there are effectively two phases. First is once we have an idea of how Boros would look like and what the use cases would be, we spend a good amount of time, I would say like the first couple of months of the year, reaching out to these funds, and then give them we gave them very consistent updates on our development progress. The goal here is to onboard at least one market maker who is willing to take a chance with us to start Boros when it is still a work in progress. So that was the goal. So we reached out to many different market makers, pitched them the idea. Many of them were fairly onboarded with the idea, but having them to become the day one user was quite a bit of an ask. So eventually we got lucky. We found a willing partner in Caledon, and then we move on to phase two. Now that we have Caledon on board as a day one market maker, we needed to make sure a couple of things. Firstly, we have the proper documentation that Caledon could work with, so that they can trade effectively, they can make markets effectively. So that's one aspect, and it's towards the larger Boros. We also need to work with these Caledon specifically to do stress testing. So stretching the simulated environments to the extremes. For example, if we have 100x leverage, what would happen? Can their system take over quick enough, and then or do they run the risk of liquidation? Yeah, things like that, right? So all these things, I think collectively must have taken at least 6 to 7 months of work. So that's more on the market making side. But now that we have a use case in place already with Caledon, we have also started reaching out to other market makers to pitch the prospect and vision of Boros, and also with the hope of onboarding them as potential users and market makers. Now, switching to the other side, with respect to the sophisticated users, we actually started Boros beta access in April. So we've had 3 phases of beta accesses, guarded ones, prior to the launch of Boros last week. We started the first round with internal team members in late March, early April. So that was very small and fine. And then the second stage was about 2 to 3 weeks after. We opened it up to community users. So some of the more active community users on Pendle, those who have very good ideas of Pendle V2, they started trading Boros at a very early phase, and then they gave us feedback. So by the time the product actually went live last week, there was a fair amount of users who already knew what Boros constitutes. And then I think sometime in June, we became more liberal with the product access. So we started inviting a lot of KOLs, some funds, friendly funds, to try out the product, and then they gave us feedback. Most of them just wanted to get a sense of how the product looks like and then read the materials. So yeah, so that was again from late March until effectively last week. So about 5 months of work. Sorry, 4+ months. Yeah, so when we launched properly last week, we didn't really start from zero. We had some support, foundational support already.
This episode is sponsored by Katana, and their 1 billion cat campaign is live. Katana is a DeFi-first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I'm curious in terms of, maybe feedback you've gotten from funds or even early users, like planning to use Boros to either hedge or just trade interest rates. Like, have they done, have they made use of strategies or other sort of, if it's products or kind of like doing their own custom management to hedge interest rates historically? Like, what feedback you've gotten from them around how Boros kind of fixes or solves pain points, or how it differentiates itself kind of within this market?
Yeah. So when we presented the idea to like some of these funds, I think the general feedback was that like they would find the product useful, but then again, like liquidity has always been like a big consideration on whether they use the product or not. So prior to Boros, I don't think there's a very efficient market. If they wanted to hedge rates, they could technically hedge using like doing an OTC, so finding a counterpart, finding a broker, and then they set a deal, bespoke ones, right? So that has always been the case, but we don't know the size of the market. We're not too sure how efficient it is, because pricing would be very opaque in that case. They could also consider futures, but I would think the capital efficiency might not necessarily be the best. And then in terms of volume, there might also be a constraint. So that is my speculation. Prior to the launch of Boros, historically, maybe there just hasn't been too many avenues for funds to hedge their rates exposure. With respect to the launch of Boros, I think a lot of funds find the utility of Boros fairly immediately. They could use Boros to hedge the funding rate exposure. Some have been the payer, some have been the recipient. Both of them could use Boros. They lock in the amount they pay if they long, or they lock in the amount they receive if they short. So I think right now, given the scale and size of crypto across the board, there are sufficient use cases that could utilize Boros for their specific needs.
Like, speaking of these players, one of the biggest player that could use hedging like this is Athena, like, because they are exposed to positive funding rates and whatnot. Do you think we'll see liquidity large enough for them to use this product at scale?
Well, I actually think Boros is a very, very complementary product to Athena. So my impression of how Athena could utilize it is to lock in the funding rate, because conventionally they've long spot short-term position that subjects them to funding rate exposure. And with Boros, they could use a little bit more of their use some assets as collateral, and then short the rates so that they can lock in the funding rate and an attractive rate, and the blended yield becomes more resilient, so that they are less susceptible to the volatility of funding rates, regardless of the market environment. And I think with that in place, the offerings of Athena, the SUSDE APY, would become more attractive. So if you recall, maybe back in the mid-year, like May, June period, when the market was fairly inactive, SUSDE rate wasn't exactly the best. Now it's good. Now it's back to the attractive rate again. But at that point in time, it was maybe 3%, 4%. Yeah. So I think if Boros had been around earlier and they lock in the funding rate at desired level of 9-10% APY, I think the blended yield would be more resilient. So that is how I think we could work very closely with the DDAP to offer a very resilient product to users.
I wonder if there would be any other way to like integrate Boros with front ends, like for example, Hyperliquid, where users can directly go long, but at the same time hedge their funding rates. Are there any plans for that?
Well, I would love for that to happen, but I think this is probably more discussions with the respective products. So I hope one day, not too long from now, we can prove to everyone in the community that like Boros is a serious product and it serves a use case. And yeah, for users who wanna lock in rates, the ideal way is for them to do it directly on the platform that they're familiar with, which would be the centralized exchanges or Hyperliquid.
On the point about Hyperliquid, so like right now, we have just two markets from Binance listed on Boros, and Binance updates its funding rates every 8 hours, whereas Hyperliquid updates and settles them, I think, once every 1 hour. So I'm curious how the frequency of funding rate impacts the capital efficiency on Boros, and like whether or not higher frequency of funding rate updates can, I guess, like improve the capital efficiency or like pricing precision on Boros.
Yeah. So funding interval should not affect the capital efficiency because if the I think the capital efficiency has a lot more to do with the rates and the durations. The frequency of settlement does not matter in this particular consideration. What it matters, what's more important with respect to funding interval is just how frequent the thing settles and how frequent you get feedback. So between Binance and Hyperliquid, because Binance settles every 8 hours, whereas Hyperliquid settles every 1 hour. Like if you're a trader, you get feedback much more frequently if you were to trade a Hyperliquid market, right? So it's versus Binance, which happens 3 times a day, for example. So let's say you short a position on Binance today, you will only see the settlement maybe 8 hours later. Versus if it's on Hyperliquid, you short right now in an hour, you know whether you're in the money or not, and then you can keep going. So I think the intensity of trading is probably higher, more exciting on Hyperliquid markets versus Binance.
That's super interesting. My understanding that is that Boros is today deployed on Arbitrum. For a Hyperliquid integration, would it be beneficial to deploy on the HyperEVM?
No, so the way Boros is set up is that it can't support any rates that are like published by Oracle. So as long as the Oracle supports it, like there can be a market on Boros. So this also means that we don't necessarily have to confine to like crypto, CeFi, DeFi rates. In the hopefully near future, we can also extend the product to non-crypto rates. So maybe something like LIBOR rates, for example, and then the trading can take place on Boros.
I think it's interesting to think about how Boros is complementary to the existing strategies run. And one thing that I can think of when you say we can go beyond just perps funding rate is almost improving the current strategies. For example, Aave USDC, you think about the PT-YT model, it's really effective for going long the variable yield because you can buy the YT token on leverage. But to go long the fixed yield with the PT, it's not that capital efficient. So I'm wondering, could you use a similar model that Boros uses for AUSDC and take the Aave Oracle published interest rate and then just exchange the payments as the price on the exchange?
Well, technically, I think so. Yes. Yeah. So if the Oracle supports, and provided that there's good amount of liquidity, based on like judging by demand, I think there could be a market for it.
Interesting. I think there's going to be a lot of use cases coming out, like when people test it out and see what's going to be done.
Yeah. There's a lot more that we can do, but we need to lay out the groundwork first, and then expand to all this very interesting and creative use cases further down.
So, as we think about scaling and growth for Boros, I guess let's just first assume we're in a world where like production's looking great, there's deep liquidity, no occurrence of bad debt. Like, what would be the primary growth vectors you'd expect to pursue first? Whether it's more exchange listings, more maturities, more assets. And I'm particularly interested in, like, if you do pursue off-chain rates like LIBOR or Fed funds, like at what point in time, like, could we expect to see that on Boros?
Yeah. So, assuming that we are comfortable with this, the risk system, and we see very good growth, healthy liquidity, then I think the natural extension for us would have to be to support more markets from a single exchange. Let's say in this case, we already have finance markets. That the next growth consideration for us would be what other types of markets of finance can we support? So maybe Solana, maybe Hype. The list goes on, right? And then after that, then it would be the other exchanges, because every exchange accounts for funding rates differently. Even though it could be BTC USDT on Binance and BTC USDT, same underlying on Bybit, OKX, they have maybe slight variability across all these different venues. So every exchange we support, we need to study them intensively, and then making sure that we account for the differences. The ultimate aim here is to allow for rates of the same kind of underlying across the board to be arc, and eventually they should converge. Right now, if you look at the BTC funding rates on Binance, they could sometimes differ greatly from the other venues like Bybit or Hyperliquid. But with Boros in place, and hopefully if we make the rates market efficient, the rates should be very competitive and they should eventually converge. And of course, along the way, I think that the leverage adjustment is also very, very essential. We started to think about the construct of Boros because of the premise around capital efficiency. So just for context as to why we derive Boros from V2, we noticed a couple of shortcomings and limitations with the V2 construct. Now, don't get me wrong, V2 is essential. It has a very important use case in enabling points and certain types of yield to be traded, but it is not exactly the most capital efficient in its construct. So let's say if we want to trade STETH, because STETH yield fluctuates very, very modestly in the range of, say, 3% and 4%. You need a very big amount of underlying in order to make meaningful amount of return from the very small swing rates. So when we supported STETH markets, we saw good amount of liquidity, but it was very difficult for us to scale up. And that was when it occurred to us, for rates that are mean reverting and fluctuate in a very small band, we need leverage. So that was kind of the backstory for how we came about Boros. So with respect to Boros, like, leverage has been a core part of it. It's just that right now we want to increase it over time, and it's hard to say exactly how many times leverage will cap at. Maybe it's 50, maybe it's 100. I'm not too sure. But we have a very strong intention of making Boros a very, very capital efficient product for traders. And so
Good.
we'll come to a number at some point. It's just that now it's a bit premature to give that cap.
Yeah, I think it makes sense. Inevitably, you want to give some outlet for the folks to gain higher, greater exposure there. I'm curious, when you went through sort of like the natural expansion of the product through different markets, maturities was not one on your list there. Is there specific thinking behind like why adding additional maturities to like the BTC markets, for example, would be meaningful at this point, or not meaningful, or too difficult, etc.?
I think it's not so meaningful at this point, but it will become essential. It's not so meaningful because we're just starting out. We don't want to have too many different maturities that could fragment the liquidity, because every maturity is a different market. So we want to just focus our attention on September pool, and we make it such that it is the same as the quarterly futures on Binance, so that if user sees opportunities in quarterly futures, that they can move over, or the other way around. So the ARB opportunity should be very, very obvious between Boros and quarterly futures. But I think over time, as we sense that the community becomes more used to the product, then we can naturally add more maturities, longer dated ones for different types of use cases. I would think that the longer dated ones would probably be more relevant for hedgers. Then the short ones are probably more relevant for speculators. But yeah, these are just our initial thoughts. We want to get through maybe the first couple of weeks, see how it goes, and then we plan out the subsequent moves.
Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research.
One thing we haven't touched on is Boros also offers these vault products for passive liquidity provision. So I'm curious if you could talk us through how these are architected and the benefits they provide liquidity providers.
Yeah. So the benefit is actually pretty straightforward. I think of it more like a vault that automatically places orders on behalf of users, so that you don't have to manage your positions too actively. Like, you can just deposit funds and then trust that the vault will do its job, and then you just sit back and earn some amount of APY. It is one of the 3 items that we have in place to ensure initial liquidity. So just for context, right? When we thought about the product prior to the launch, we wanted to make sure that the product has a good amount of liquidity on day one. So we engaged Paladin, which I touched on briefly. And then we also developed a very, very basic market making bot that serves as the backup in case the market maker does not operate as intended. Then we have like a backup liquidity layer. And then the vault also functions as another backup. So the vault, as it is right now, has proven to be quite popular. It has, when we raise cap, it just gets filled in minutes. To date, it has about $225,000 worth of liquidity, generating about 50% in APY. Now, the construct of it is actually fairly simple. we're starting with a Uni V2 kind of setup that basically takes in assets and then allows the trading across a very wide spectrum of rates. So this is very different from a V3 and V4 kind of design where the concentrated liquidity is a big part of the proposition, right? Here we wanted to have like a more spread out rates spectrum so that whether the rates go up to like 50% or goes down to negative 50%, there will still be liquidity to trade against. It's just that the price might be pretty bad. But here, again, because it's the first iteration, we want to start with something simple, gather data points, and then improve on it. So yeah, so far it's working as intended. The APY is also fairly attractive and healthy, but we also want to caution users that because it's like a V2, it's largely inspired by a V2 setup, right? There will be a permanent loss. So yeah, users will have to take note of that.
Is the Vault product something that could theoretically be listed on a Pendle V2 market for users to speculate on what that APY looks like?
Maybe further down, if there's a LP token, potentially.
I guess another follow-up would be right now, like playing around with the UI, I get quoted different fees for whether it's a maker or a taker order. So I'm curious like what the current monetization parameters are and where you would expect like the blended take rate on volume to fall between maker and taker flow.
Yeah, so for Boros, there are two revenue streams. One is from the swap fees, but in this case, maker does not. Maker fee is 0%, and then taker is 5 bips. So it's hard to it's really hard to project the volume. But yeah, it like because it's 5 bips, right? It will scale with volume. The other revenue stream is the settlement fee. So with respect to settlement fee, Pendle charges 0.2% for both the long and short legs. So what this means is if there is 400 million, like let's say like there's $400 million open interest, just arbitrarily speaking, right? Then the revenue for Pendle would be 0.2% times 2 because the long and short legs will have to pay this and on the $400 million notional volume. So that would be another revenue stream. So put it simply, right? It's actually very similar to Pendle V2 kind of revenue structure. There's the YT base fee, which is very similar to the OI structure that I just described, because Pendle charges 5% on the yield that gets tokenized on Pendle, right? Like as an example, if STETH generates 5% in APY, then 5% of that 5% yield will be Pendle's revenue. Then the other revenue stream for Pendle V2 is the swap fee. So when there's like trading activity, Pendle takes a portion of it. So in the same way that's taker fee on Boros.
On Pendle V2, like over time, a higher portion of the revenue has come from that take rate from the YT. Do you foresee the same thing happening in the case you just described with Boros?
I think it's possible. It depends on, I don't know. Like I think it's possible, but I am not sure the likelihood of it. At this point in time, I would say like 50-50. Like maybe it gets traded very, very aggressively. That maybe swap fee becomes a major contributor of the revenue. But nevertheless, like we think it's important to have multiple sources of revenue streams so that we have a bit more leverage to see how we can best adjust the product to benefit the value add to both the protocol and to the users.
Awesome. I would love to like just move away from Boros for a bit and speak about like Pendle V2. You've seen a lot of growth this past few months or weeks, like particularly with the growth of SUSDE and that utilization of Pendle. I'm curious on your thoughts on like this synergy between Athena, Pendle, and recently like with Abbott. Like it seems to me to be one of the most relevant like narratives or like traction stories taking place in DeFi today.
Yeah, I think this is really one of the major breakthroughs for V2 for us for V2. This has been in the works for quite a while actually. As I speak right now, we started conversations with Athena and Aave probably, I want to say September, October last year, just to get them started seeding the idea and get them comfortable with the whole setup. So Aave has become a very important distribution venue for PTs. And because PT is now listed on the core instance of Aave, then it becomes a lot more recognized and people feel more confident in holding PTs. So in all, it is very, very net beneficial to like the Pendle, Athena, and Aave communities. I think, yeah, so just to give a bit more context, right? Like the reason why it is a big deal to us is because of the amount of work that gets invested in making this happen. Aside from just the business development work, we also had to invest in risk curators to make sure that the solutions that we propose would fit the requirements. And then once that gets in a way accepted, then it has to also subject to a governance proposal. Once that's done, and then someone has to build it and seed liquidity, all of that. But it became a very meaningful ad when PT SUSD first got listed on Aave, and it became the fastest, the market that got $1 billion in TVL in the shortest time. To my knowledge, that's about 1 week. So immediately, I think 1 week after SUSD PT got listed on Aave, it took about 1 week to get to $1 billion in TVL. And then subsequently, we added more markets. And yeah, now there's a little over like $2.5 billion of like PT assets on Athena, sorry, on Aave. And that strategy gets replicated much more aggressively across other different venues today.
Yeah, I was doing governance at the time and I was keeping up to date with the proposals to add the PT, and it's a huge amount of effort just thinking about how to price those assets, right? It's a huge pull. And those listings were very successful. And I'm wondering if now going forward, because PT USDE did so well, is there maybe a path forward for other assets to be listed, other PTs rather than only SUSDE?
I think it definitely wouldn't stop with SUSDE, but with Aave, there's always the liquidity requirements. Now, we are not sure what would be the threshold, but it wouldn't be insignificant. So other assets, if they want their PTs to be listed on Aave, they probably have to have maybe a couple of $100 million in underlying TVL. And then the PTs also have to be successful, $150 million in TVL, before it will get considered as a collateral on Aave. So again, I don't know the concrete figures, but it's not going to be insignificant.
And one thing we've seen recently is, a lot of Pendle TVL, sometimes it's concentrated in a hot maturity that, ultimately comes into expiration. And with maturity, like that TVL can roll off the books. But July 31st, we saw a huge maturity in the billions. And I believe Protocol only saw around 200 million in outflows before making a new all-time high in liquidity. So I'm curious if you think like the Aave PT listing, like particularly now for the September maturity, if that's improved the durability or the stickiness of Pendle's underlying liquidity.
Yeah, I think it's definitely a big part of it. But also, this is, I want to say, yeah, we've been operating maturities for some time now. So we've learned from our previous maturity events on how to prepare for some of these major maturity events. So to your point, I think having the new maturities, having Aave in place is very essential. Yeah, because the looping strategy actually creates a lot of incentives for users to participate. And usually with USDE pool, the most recent one, when it gets lifted, the cap got lifted, it got filled up very, very instantly. So the incentive was there to attract new participants. Then what we did on our side is also like for major pools, we try to provide more alternatives for users to roll their assets to. So let's say if you have SUSD now, we always want to make sure that there are new maturities to capture these liquidity so that if you want to continue to hold SUSD, if it matures in September, you can at least roll into November and then stay on with the Pendle pool for a while before you consider if you want to move somewhere else. And then the good thing with the Ethena ecosystem is that, like with USDE, you're not just confined to SUSDE. You also have the alternatives in EUSDE, TUSDE, and then Strata, a couple of other new protocols that are taking in USDE as deposit asset. So if you're not too comfortable with whatever SUSDE is paying, you can always consider these other alternatives. And similarly, because now bulk of our TVL is in the form of stablecoins, because they're all denominated effectively like US dollar, right? So the interchangeability becomes a lot more seamless. You can jump from USDS to USDE quite seamlessly because these are assets with deep liquidity and they're all very consistent in denomination. So yeah, if USDS offers you a better rate, you can hop over quite seamlessly on Pendle. Yeah, so I think these are things that we have in place that provides user better experience when they reach the maturity event. And as much as possible, we want them to stay with Pendle. So yeah, the UI UX improvement and then the range of yields that we offer across a broader range of assets, I think that also helps.
And we've frequently seen, Pendle pursue new deployments on like different EVM instances and whatnot. So we've seen a lot of success out of the gate with the HyperEVM deployment. I think over 320 million in liquidity right now. But then, we also have Converge coming up with the Pendle deployment. And we've seen historically like tremendous success with all of the Athena's instruments listed on Pendle. So yeah, I'm curious what you're seeing with the HyperEVM deployment, but then also your thoughts on how successful the Converge instance might be.
So yeah, I think HyperEVM has been a very nice launch for us. You pointed out 300 million TVL. I think to be honest, I think it exceeded my expectation. Not that I don't think HyperEVM is good. It's just that the HyperEVM is fairly new. But the community is very active and like hype holders are very involved in growing the community. And because of our involvement there, we've seen firsthand how important it is to work with the right group of partners and then from there get the right type of publicity. So that's like I think a learning there. With respect to Converge, I believe like it can be very successful. I'm not too sure the launch date of the chain, but we've already worked with most of the important protocols that are scheduled to launch on Converge, and we're bootstrapping the liquidity for most of the important ones. I think, yeah, with the traction that we've seen so far, Converge should do reasonably well.
Zooming out, like, and just thinking about the Pendle token, I'm just curious, like, from your perspective, if you could launch Pendle again today and redesign the tokenomics, would you still choose the V model that Pendle has today?
That's a very tough question. The short answer is maybe not. I think if I can, I think like if we can do things again, maybe we'll just keep it simple. But the fact is, like, vePENDLE hasn't been exactly a bad implementation. It's just that there's additional work for users who want to benefit from the revenue distribution. Like, voting becomes essential. Otherwise, holding the token does not guarantee you any kind of yield. So yeah, that's that. But I think in the near term, because we have so many other things that are going on, and like, let's say V2, we have a very packed pipeline that we need to ship. With Boros, we still need to find a product market fit. We'll probably come to revisit the tokenomics slightly later after we're sorted with the products.
Makes sense. Well, I think we might be through all the questions from our end, or just the general flow here. Tian, it was great having you on to talk all things Boros and then Pendle, of course, as well. Maybe just to kind of roll out the red carpet for you before we close things off. I guess, what are you looking forward to kind of over the next few months? What do you have your eyes set on, if it's just focusing on Boros and the growth there? Just keen to get your thoughts before we close things out.
Yeah, I want to say, like, for us, it's always Pendle first, right? And Pendle now has two products. V2 has its own roadmap, and then Boros has its own roadmap as well. We're not compromising on any of these products. In fact, the way the team is structured is to have team members allocated to the respecting products with very little overlap. So maybe only at the management level, where we will involve in two of these products, but by and large, most of the team members should only be focused singularly on either V2 or Boros. So I look forward to having institutional instance for V2. This is part of the Citadel that we announced. I look forward to having bridge PTs, cross-chain stuff. So those are very important deliverables that we should expect for V2 in the next for the remainder of the year. Now, coming to Boros, because it's a new product, we are like I mentioned, right? We are focusing a lot more on the safety and security aspect, making sure that the foundation is set up properly before we scale up. And then, assuming that we're able to scale up on the funding rate side, support more exchanges and more types of markets, then the next category of rates that we can potentially support would be the POS rates, like ETH staking yield, Solana staking yield. And then the next category, before we even touch TradFi rates, could potentially be borrowing rates on money markets or even exchanges. Yeah, so these are growth potential for Boros, and these are multi-billion-dollar addressable market. There's a lot of room for us to wiggle around and then to navigate. But the most important thing right now is to make sure the product is safe and secure, and then we need to find a product market fit, and then we scale accordingly.
Love it. Well, it's been great to see, only a week or so out from the Boros launch, the, relative level of excitement there. So we'll definitely be keeping our eyes out, watching the growth to come. But as I mentioned, great to have you on. Appreciate you walking through all things Boros and Pendle. Of course, with us, you guys have your eyes on all of these things at once. And for all the listeners out there, thanks for tuning in. Sean, Carlos, Luke, of course, thanks for joining in and asking some very meaningful questions. And we will see you guys next time. Appreciate having you on, Tiana.